Welcome to ISE's FX Options Weekly Outlook, a weekly outlook on the US dollar versus the major currencies, hosted by Jason Ayres, a top industry instructor and founder of OptionSource.net. Learn to trade your views on the strength or weakness of the US dollar.
Hello and welcome to the ISE FX Options Outlook for August 30th, 2008. This is your host Patrick Sresna, the Chief Derivative Market Strategist at OptionSource.net. First off, we're going to have a look at the weekly chart on the US dollar index. A month ago, when we broke above that 74 to 74.5 focal point, the US dollar started a very strong move, which has seen this rally push up right into the focal point of the 77 to 78 area that we've been focusing on up till now. Even though in the big picture we are bullish on the US dollar and think that this bullish breakout is actually something that will play out in a much bigger picture over the next year or so, at this stage there's no denying that we are overextended on the upside over the short-term period. Expecting some sort of backfilling or consolidation is very natural for the market here. At this stage, the area we would be, from a Fibonacci perspective, a healthy consolidation would be down into the 74-75 level on the downside. That may take several weeks or a month or more to play out, and it's not something that we can really expect on the very short term. But if and when we do have some sort of a healthy backfill, we then at that stage would leave the window open for a continued rally that could push all the way up into the 80-82 area on the upside. First off, we'd like to start off with looking at the US versus the Canadian dollar currency pairing. We had a very strong rally off the par level up to the 106.5 to 107 focal point, which we've been talking about over the last couple of weeks. Subsequently, we identified a support level down at the focal point at the 102.5 to 103 area. At this stage, last week when we were looking at that consolidation, we certainly had left the window open for a consolidation all the way down to the focal point. But at this stage, this consolidation here is a 38% retracement, which is a very natural retracement before a subsequent rally. So with the breakout that we saw on Friday, we cannot rule out the possibility of a continuation on the upside. If in fact we do see any breakout of any significance above the 107 level, at that stage we would be looking for a move all the way up to the 109 to 111 area. With that said, this breakout hasn't officially occurred yet, so at this point we have to leave the window open for this to be a two-wave consolidation. So if we at this focal point of the 106.5, 107 reject back down to the downside, at that point we would be looking for a two-wave consolidation that would finally end at that 102.5 to 103 level, and at that point we would be looking for a much bigger picture rally. Next, we're going to look at the US Euro currency pair. Over the last month and a half, we've seen that rally of significance up to the 68-69 focal point, which we've been talking about over the last couple of weeks. At this stage, it's been forming more or less a rising wedge formation on the upside, which has the possibility of failing for a further downwards consolidation. At this point, we continue to be bullish on the US dollar versus the euro, but first off, we're expecting a little bit of backfilling on the downside. At this stage, a backfilling move would naturally move down to the 66-66.5 area, and a deeper one may even consolidate all the way down to about the 65 level down in that focal point. But ultimately, we do expect the resolution of any pullback to be on a new move to the upside. If at this stage we were to, for whatever reason, break above the 69 level, at that point the window opens for a measured move all the way up to the 71-72 focal point on the upside. So we just need to be aware of what the price action is doing at the 68-69 focal point. If we do see the price action rejecting here, look for the consolidation down to the 66 level on the downside. A breakout above 69 means that we've undertaken a new rally that could go all the way up into the 71-72 area on the upside. The one thing we just want to point out is if we look on the MACD histogram at the bottom, we're seeing the momentum completely being lost on the downside here. We're seeing diverging price action as we're at highs or we're near highs, and while the MACD is losing its momentum. So in fact, the window for a possible consolidation or backfilling is quite possible at this juncture. Next here we have the US dollar versus the British pound currency pairing. We've seen a rally of significance up in this currency pairing all the way up to this 55 level. Last week we were discussing the 54, 54, 50 focal point. We now have a technical breakout on the upside. From a measured move perspective, that's calling for a rally that may extend all the way up to the 56 to 57 area on the upside. At this stage, though that is the measured move, there's no denying that the rally is quite overextended on the upside, and at some stage some profit taking or backfilling is expected. If in fact we do have a continuation of the rally, at some stage when the consolidating or the backfilling starts, the first target area obviously is back into the 54.50 focal point, but a further consolidation below that zone would bring us to what we're identifying as the 52.5 to 53 focal zone on the downside. That in itself we're expecting as a consolidating move at some stage before a bigger picture rally may ensue higher on the British pound. Last, we'd like to take a look at the US dollar versus the yen currency pair. Now here's a currency pairing that has been marching to the beat of its own drum. And more or less, the US dollar started to rally back in April and has been in a clean upwards channel formation since. At this stage, we identified the two focal points, the 108 to 108.5 and the 110 to 110.5 on the upside. At this point, if the 108 to 108.5 area holds a support here, we are poised to potentially break out on the upside. If we did, we would be looking for a break above that 110.50 area as confirmation that in fact we started another leg higher at this point, which would measure out a rally all the way up into the 112 to 114 area on the upside. Subsequently, if we did see a breakdown of this 108 to 108.5 area, the focal point below that we're focusing on is down at this 105 to 106 area, in which we would then be looking for some form of support to occur in between that band. And finally, when we look at the MACD down below, we can see that we had a negative crossover and a negative MACD histogram, both occurring about a week ago, and at this point it is continuing to show a negative market action. At this point, without us having any major technical breakdown, we cannot have any validity to that rollover yet. At this point, if we in fact have support hold here and a breakout on the upside, that MACD will very quickly turn back up. So wait for a little bit of confirmation before using that MACD indicator as an official sell signal, and wait till you have the official breakdown below 108 to have that confirmed. This concludes our ISE FX options outlook for August 30th, 2008. Thank you for joining us.
Thank you for participating in this week's session. Please join us again next week. For more information about Jason Ayres and to sign up for free FX options trade alerts, just visit www.optionsource.net. To learn more about ISE FX options, including our weekly webinar series, visit us at www.ise.com/fx. ISE FX options can easily be traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in US dollars and have a European-style exercise.